Welcome to another episode of the Smart Real Estate Coach podcast, your source for actionable real-life examples and advice to help you move to the next level of investing. Each week, we help you make a quantum leap in your business, your finances, and/or your life. We want to help you take back control, help you thrive during chaos, and lead you through the current crisis to a better tomorrow. For more resources, check out smartrealestatecoach.com and be sure to give us a rating and review on your favorite platform.
Okay, welcome, Wicked Smart listeners, to another Wicked Smart Masters class. Today we're going to hang out with Brandon Cobb. He was a former, there's a couple things I love about Brandon's bio, and you're going to hear us chat about it. He was, number one, a former medical device sales rep. That avatar tends to be pretty prevalent in our community just because that's hard work. It's like they hustle, they make good money, but it's a lot of work for W-2. And to escape, that's not easy either because you make good money, right? So then he became a fund manager in Tennessee. He manages annually like over 20 million. It's not a small number. And here's the other connector that I love that I want to chat about is the 22 million manages is new first-time home buyer housing and build-to-rent communities. So I want to talk about that. It's a little different model. He was actually featured on the cover of REI Wealth magazine, Realty 411 magazine, and he's been published in Forbes like us, like myself. His greatest passion, again, another connect with stuff that I'm big on, is developing unforgettable experiences with loved ones, and he sees the business as a tool to do that. And I have been screaming. People ask me all the time, what's your why? Well, my why is similar. My why is to create experiences, create the wealth and money and income to create experiences that money, wealth, and income can't buy, right? Before we bring Brandon on, let me just say this. There are some really cool things going on in the Wicked Smart community, as always, right? Because I'm biased, but I'm going to tell you that there's some really cool things coming up here. And I want you to have it on your radar, whether you're a listener that's listened to, the 500 some odd episodes. I think the 500th just passed us, or you're brand new to the Wicked Smart podcasting community. Number one, we started in 2024, the Apprentice Program. The Apprentice Program was built for someone to kind of test our community. It was built for someone that might not have the resources to go too aggressive. It was built for someone that wants to do some deals in the creative world and needs a little bit slower path. It's an awesome experience to see what we're all about without paying for an associate program, right? So I would encourage every single one of you, if you have not sunk your teeth into at least looking at the webpage, go to smartrealestatecoach.com/apprentice podcast. Okay. And I will tell you that it'll be an eye opener for you because it's about $13,000 plus worth of product for less than a couple grand. It's a little nuts. And then as part of that experience, the apprentice experience, you get to attend in the 12 or 13 grand of stuff you get. One of them is you get to attend right here in my office, in our conference room, the In the Trenches boot camp. We bring in 10 or 15 people. It's all we can fit. And again, it's free with that, but I want you to see the webpage so you can understand what we do. It's super, super powerful. By far, one of the best things we've ever done as a company. And guys, let's go way back. We're in our 12th or 13th year. I've been in business 33 years. I haven't seen anybody in the education space even come close to this. Go to smartrealestatecoach.com/ITTB podcast. It stands for In the Trenches Bootcamp. ITTB podcast. So once again, smartrealestatecoach.com/ITTB podcast. All right, Brandon, with that as a little background, welcome to the show, buddy. Good to see you again.
Yeah, you too. How are you?
I am just terrific. I think for the Wicked Smart listener, we'll go back to basics, then you and I will kind of just take it organically, meaning give them a little kind of look behind the green curtain, if you will, as to how you landed in the real estate world from medical sales. Because there's a piece of your story that were neat that I want to unpack, and that's one of them.
Yeah, man. If you'd told me 8 years ago we would be inventing these new housing communities, I'd have looked at you like you had 8 heads. My story, I don't have this story where I was dreaming to be an entrepreneur and I spent 20 years in my corporate job and I just had enough and had to quit. That was not me at all. I actually started like a lot of people just, out of college. I had one goal in mind. That was to make my parents proud. And I just wanted to get a nice corporate career, stable income, save my money, live below my means, and use my job as a way to create wealth, and eventually retire, right? And I was on this plan, 30 years, I'm going to retire or whatever. I'm saving money. I'm doing my thing. And, after a while, I realized it wasn't working out the way I wanted it to. I had a dream, like a lot of people, to eventually be able to, quit my job. The job was a means to an end. And it didn't occur to me until one sunny Friday afternoon as I met my boss over at the Starbucks in West End, excited to give him the news about my day as a sales rep and all the great sales I had made, and the doctors that were loving my product and the hospitals that were loving my capital equipment, that before I could get it out of my mouth, he fired me. And that was kind of my moment that I realized that nobody was going to look out for my financial well-being but me. You can be as loyal as you want to these companies. You can put in all the blood, sweat, and tears. At the end of the day, you're a number to them. And so from that day on, I said, okay, if nobody's going to look out for my financial well-being but me, what do I need to do? And so that started me on this road of entrepreneurship. And, again, at the beginning, I made all the mistakes. I started a coaching business on how to life coach people. Turns out not many people want to take life coaching advice from a 27-year-old single guy with no kids, go figure. I started a course on how to break into medical device sales. That flopped. I started an online motivational blog, completely flopped. And then I discovered this tool called real estate. And I literally sold all my retirement accounts to buy my first house that I was flipping. Just paid the penalties, paid the capital gains tax, went all in, purchased that house cash using my own money. Huge mistake at the time. But that's what started my business. And I flipped that house. I made like $30,000. And I took that money and I literally just dumped it back into my business, mainly in the form of marketing. And I joked that those early days was similar to that scene in Batman where the Joker slides down the mafia's big pile of money and he throws the gasoline on and he just lights it on fire. That's what I was doing with marketing dollars, and I didn't really know what I was doing. And it wasn't until I had gone about $98,000 in the credit card debt, blown through all my retirement accounts, had no money, that the learning really started. And so I was flipping houses, and, fast forward to today, we just kept reinvesting back into the business, back into coaching, back into mastermind groups. That's why I highly recommend, you do an awesome job with your coaching program. The value you provide is immense because it changed my life, investing in coaching and mentors. And, we did over 187 real estate transactions. I made the mistakes. I paid my dues. And, today we invest in, affordable housing communities. So we go in, we take raw land and we get it converted and approved for a new community. And then we either sell off that deal or we will develop and sell it to a Wall Street funded national home builder. And that's kind of how we settled on what we do today. And I say all of this because I don't want people going down the same road that I was going down, which is, working for somebody forever, or, doing something where you're trading your time for money and you climb the corporate ladder, you do whatever for 20 years and all to realize that it was kind of for nothing here.
Yeah. So you see me taking notes, couple things. First, a question really, as you were talking, would you agree that in hindsight, that sort of the risk, people talk about the risk of going your own business. Would you agree that the risk is the job?
Oh, 100%, because it's what you're not making. It's the opportunity cost. So every minute that you spend doing one thing is a loss of the activity that you could be spending making more money. So the opportunity cost is extremely expensive, and a lot of people don't realize they're paying that opportunity cost because we just grow up in culture. Our culture, ever since we're a little baby, tells us, hey, go to school, get a career, and, trade your time for money. I mean, that's what people are taught. And so until you go, you go open in this world, like a lot of your students probably realize, like, oh my gosh, I don't have to trade my time for money. I can learn how to do real estate deals. I can invest in real estate. This is absolutely amazing. And, it's a whole different world when your eyes are finally opened.
Yeah. So what opened your eyes, speaking of that, when you started tinkering with all these little things when you were younger? Because somebody or something must have, how did you all of a sudden go, I'm going to start this, I'm going to start this. And, that I wrote down entrepreneurial stuff when you were talking. So something sparked you, what or not? You tell me.
So what sparked my entrepreneur journey? Is that what you're asking? So it was being
Tried
fired.
a bunch of things.
Yeah, I tried a bunch of things. I was like, well, I've got some money saved up. So I did a good job of following the blueprint that my parents had laid out for me, save my money, live below my means. I didn't, live in a super nice apartment downtown. I didn't buy a nice car. I owned all my assets cash, like my car and stuff. I didn't have any monthly payments on any cars or anything. My rent was like 1/10 of my income. So I'd done a very good job of living very below my means. And I even had some investments at an early age. So my parents did a good job of setting me up where I could go and start my own business and take those risks. Of course, you can never be completely ready to start your own business because even though I had some money saved up and some skills doing sales, which, did pay off when I started my real estate career, I blew through all that money and I racked up $98,000 of credit card debt. And that's when the real learning started.
Okay, cool. So were your parents at all entrepreneurial, or did they more go the job route?
No, my mom was a Catholic school teacher and my dad is a computer engineer, worked for IBM.
Got it. Okay, so you broke the mold. That's cool. I'm curious on the land deals, and I guess some other questions here, just on what we said. What size land you talking about when you say you go in, grab the land, permit it? Like, I love that model. What size parcels are you talking, generally?
Minimum is really 6 acres. Our whole strategy, there's an enormous opportunity here. It's kind of funny. So we flipped a bunch of houses, doing 30, 40 of those a year. And we kind of had some of our key performance metrics tell us like, oh gosh, this is getting very saturated. We weren't flipping $250,000 homes, making 40, 50 grand a house. We were flipping $420,000 houses, making 20, 30,000 hours a house. So it got kind of tight and we started building houses and that was great, man. It was like a blue ocean kind of all over again. And that started to get a little bit saturated. We started our own general contracting firm to kind of help mitigate cost and timelines. And so we started building these houses. Well, something happened. We went from building all these kind of onesie twosie houses to going, oh my gosh, instead of building 30 houses all over the county, why not just build 30 houses in one area? And we're like, that's why these national home builders build all in the same area. So we started going after those minimum 6-acre parcels and meeting with the city to identify the parcels of land that we could do these types of deals with. And we were getting ready to go vertical on like 40 townhouses when we got a knock at the door. And that knock at the door was by a national home builder. These are like your Lennars, your D.R. Hortons. They're publicly traded, right? They're on the stock market. And they said, hey, we really like your deal that you're building over there. And we go, oh, well, it's not for sale. We don't want to deal with you. And they said, well, what if we offered you this for it? And we said, you can have it. It's for sale. And by the way, do you want the one across the street? Because we're going to build this so you can have it. And what's happened, Chris, over the last 5 years is 2 of those years, nobody bought or built anything because of 1, COVID in 2020, and 2, the interest rate rise in 2022. So the 2 of the last 5 years, nobody bought anything. And then we were already short we still haven't recovered from the 08, 09. From the lack of housing that was built there. So as you know, there's an affordable housing crisis. We're 3 to 6 million homes short, depending on what news source you read. And so what we do is we turn farmland into these brand new entry-level housing communities for these builders, and they're the ones that go and build the houses. So we're on the side of the table that Wall Street is cutting checks to. And as you know, Wall Street's got an unlimited purse and can buy as much land from us as humanly possible.
That's awesome. That's awesome. And how do you get your leads for that, the land piece?
Yeah. So when we were flipping houses, we had this spray and pray approach, right? We were spending $30,000, $40,000 a month on mailers, SEO, marketing. And, we had this big marketing machine built. I think 30, 40% of our overhead was just marketing. We might talk to 30 people a year. That's it. We are very hyper-focused. We get most of our leads from going into the parcel viewer. And if you pulled up a parcel viewer on your computer of all the different lots in a city, it's like a giant puzzle. All the pieces fit perfectly together. We go after the big puzzle pieces that are kind of in the middle of all these little bitty puzzle pieces. All the little bitty puzzle pieces are density. It's like 100, 200 homes that have been parceled out. And so it's this giant puzzle piece, and we go after those big puzzle pieces. that's pretty much it. And what I love about what we do that's just different is we don't buy anything until all of the value has been approved by the city. So when you take it from farmland to 100 home community, you build in a lot of equity in that deal. That land's worth a lot more. And that allows us to do two things. One is we can pay the landowner a ton more than what the property's worth if it's just land. And two, it allows us to build a ton of equity in for us and our investors before we buy the deal. So we put it under contract, we get all the approvals in place, and then we buy the deal afterwards. And a lot of the time, because it does take about a year to get these approvals in place, we've already contracted with a builder that's going to buy it. So we've got it pre-sold by the time that we finish our due diligence period.
And it sounds like, if I'm tracking with this, sellers love it because you gave them a fair or a nice price, and it's contingent upon your approvals.
It's so easy to deal with the sellers because we're giving them so much money for the land. They get it. You know, it doesn't have to be a genius to explain that, hey, your land right now is only worth, this amount of money. And they know that, right? They're looking at what other similar stuff is selling for. And I said, but if you go under contract with me, Mr. Seller, I'll give you an example. This lady had a home sitting on 20 acres. She, wanted, she's like, man, it's a farm. I know it's only worth like, $400,000 with a little bitty old home on it, would you be willing to pay me more than what the property's worth? Like, no, but how about we pay you $700,000 for it? She's like, well, how are you going to do that? And we explain the process, and she's like, sign me up. And so we bought it for $700,000. We could put 74 homes on it. And so she got a really good deal because we built in that value for her, and we got a really good deal because that piece of land was probably worth about 1.4 after we were done with it and everything. So we got a lot of equity in the deal as well. It's a win-win.
I love it. I love the model because I did land on it before I did what I'm doing now, and you're just doing it on a great big scale compared to what I was doing. I love it. I really do. Okay, who wants to be the next apprentice? Pretty interesting, guys. We started this apprentice program back as a July 4th, 2024 promo. That's where it started. And it was so incredibly effective. We were just going to run it for the summer. It was so effective immediately. We kept it. It's in place now. And what is it? It allows you to get into the community, the Wicked Smart community, for less dollars than the QLS Home Study Course sells for right now on our site. In fact, when you go to smartrealestatecoach.com/apprentice-pod, apprentice-pod, when you go there, you're going to see that as an apprentice, you're going to get over $13,000 worth of coaching, the possibility for you to touch base with us if you want to 4 or 5 times a week, and it doesn't exist anywhere out there, frankly. That's why we did it. We did it for 2 reasons. One, no one is giving you the support out there. We keep hearing feedback, which is how this was born, that other educators are not giving support. They're just selling stuff. So it doesn't exist anywhere, and nowhere in the real estate education or coaching space. And we want to help you do one thing, deals. So we've wrapped the support mechanism around this. We've allowed you to get into a Slack community with the other associates who previously were protected in Slack, and now you get to jump in there and experience that for 12 weeks. You also get to come to the In the Trenches boot camp, which is private. It's a chance to hang out with the family team and one of the coaches for 2.25 days in our conference room, roll up our sleeves, get calls done, get deals done. If you come with leads, you leave with deals. Absolutely incredible. I could go on and on. Go to the website right now. Check out more information about the apprentice, and I'm going to give you the In the Trenches bootcamp site because you don't have to become an apprentice. It just happens to be free with apprentice and associate. So 2 links I'm going to give you, super important. smartrealestatecoach.com/ITTB-pod. That's going to give you some information about the bootcamp. If you want to buy a ticket to the bootcamp, it's more expensive, but you can. Just to come check us out. About 1 or 2 people every time we run it do just that. Or become an apprentice, and it's for free. smartrealestatecoach.com/apprentice-pod. Okay, so talk about this. Talk about your follow the money strategy, just to pivot a little bit here. What does that mean for them to understand what I'm asking, and then explain a little bit?
Yeah. So, for investors, I'm sure a lot of people, listening right now, are either active investors or maybe they're passive investors who are thinking about, active. Our whole thing that we do when we're trying to place people's money, because we work with a lot of investors that, they have a career and, there's nothing wrong with that. If you're lawyer and you're on your own law practice, you might not want to quit that because it's bringing you a lot of money.
Right.
But you do want to make investments where you don't have to trade your time for money one day. And so real estate's a great tool to do that. And you can do that passively by investing in other people's deals. So for example, I go out, I find all the deals. Our investors, they just invest and they get mailbox money and it pays for their living expenses and they're basically retired. So they don't have to work. They choose to work. And our follow the money strategy is, I joke that it's similar to being invested in toilet paper during COVID. Doesn't matter what the economy is doing, as long as money is flowing into that asset class, you're going to be good. And during COVID, a lot of businesses went under, restaurants and hotels, but toilet paper did well, baby, because money was flowing into it for whatever reason. And so we look at areas where there's three types of money they can pour into an area that's going to help insulate your investments. One is institutional money. One is like your large corporations, your Amazons and your Facebooks and stuff. And then the third is your small businesses and you've got consumers. So those are like the four types of money that can go into an area. And so as an investor or even as an active real estate operator, you want to be in an area that money's flowing into because a high tide lifts all boats. And we've been blessed to be in the Nashville market. I'll give you an example of how to identify if some of this money is flowing into a particular market. And, this doesn't just apply to Nashville. You can apply it to anywhere. One is you can go and you can look up how much institutional money is moving into an area. A quick Google search will tell you. Nashville, what I love to Google is the before and after skyline. So if you have a Google search and you're looking for a particular city, Google like before and after skyline Nashville or before and after skyline Dallas, and look at how many new skyscrapers there are in like a 5-10 year period, whatever Google will tell you. It's doubled in Nashville over the last 10 years. It's crazy to see that skyline fill up. That tells you there's a lot of institutional money moving into an area. Also, you can go pick up a copy of your local Nashville Business Journal or Charlotte, North Carolina Business Journal, and it'll tell you about some of the larger corporations, which is the second type of money that's moving into an area. You'll find out if like Amazon just built a huge skyscraper downtown. It's going to house 5,000 C-suite executives at Amazon. Oracle's planted seeds here. Facebook's planted seeds here. So there's a lot of these large corporations that are moving to an area. When large corporations move to an area, they bring people bring money. And so that's the second thing to kind of look for. The third is small businesses. And a great metric to track whether or not small businesses are moving to an area is the local commercial rent per foot. So you should be able to get historical numbers from like the St. Louis Fed. They've got a lot of really good data. There's like Oxford Economics. You can look this up, but look at the local trends in the commercial dollar per foot rental rates. That'll tell you what small businesses are doing in the area, and you can get a good vibe of whether or not they're moving. And then finally, the fourth type of money and the follow the money principle is the consumers themselves. And this is as simple as going and looking at a population growth map. Like, just Nashville has been in the top 10 fastest growing city like the past 6-7 years. Yeah. We want to be in an area where money is moving, and the money comes from those four sources.
It's awesome. Serious nuggets there, Brandon. I'm loving it. And I know I'm taking notes. So I hope they're taking notes, even if they're driving. I don't know if I missed this because I'm looking at my own notes. How involved does the city get and when in your deals? I'm going back to your deals now because I get the whole permitting stage because I did that and love it. Well, how involved do you get them, or do you need or want them involved?
Yeah, so you have to get the approval from the city for your development. So they're going to be involved no matter what. But here's a little trick we do, and we teach this in our mastermind course that we're going to be launching, teaching this land development stuff, is when we go and we're looking at a piece of land and we have like an owner that's on the hook and they're like, yes, I want to sell my land. Before we spend any money on it or do anything crazy, we go meet with the planning director. And the planning director or the planning staff, they have a vision for the community. So everything that they work on is designed to bring that vision to life. The city needs developers to bring the vision to life, and the developers need the city to approve their communities. And it's a good symbiotic relationship. And what we do is we go to them and say, hey, we've got this parcel we're considering buying. What type of density would you support? The current zoning is this. Would you be willing to change it? And we'll go meet with, if we get enough buy-in from like the planning director, and we get enough of the planning commission on board. So there's a commission that will vote and whether or not to approve a development. That tells us we can pursue that deal. If they shoot it down and go, no, this will be farmland forever, we will never approve anything in this area, well, we just don't pursue it, right? Yeah. So that's one of the things, that's a little trick that we do before spending a lot of money, is talking with the city is a huge part of your success. And I highly recommend, before you ever even have a deal, go meet with the planning director, go meet with some of the planning commission, talk to them and sit down about what the vision for the community is. What are the needs of the community? What are the citizens complaining about? And really do a needs assessment on what's in it for them. Because when you do that, when you build these relationships before you come and ask them for something, that is going to go a long way in determining your success.
I love it. I mean, even for small projects, right? Like onesie twosies, that's a smart move. Go in there early.
Yeah. Oh yeah. Yeah. Doing a face they know as opposed to a face they're seeing for the first time is going to go a long way.
I've always been a huge advocate of sort of the entry level, like in most markets. I remember back when I was in my 20s saying this. So what's your thoughts on that? Because I know you're a big advocate of it, entry level, and why you're such a big advocate of it? I'd like to hear your thoughts on it.
Yeah. So for the foreseeable future, next 4 or 5 years, we think that affordable housing products are going to outperform most other real estate products, just because affordable housing is arguably the lowest supply, highest demand product right now due to interest rates. Interest rates have made it extremely expensive to afford to really buy anything. And so when you have very low supply, very high demand for a product type, that tells us, okay, we want to be there. And so for us, what is that? It's affordable housing, not Section 8 or government housing. I call that big A affordable. We're small A affordable. So what does that mean? It means that $2,000 per month mortgage is kind of what we're aiming for, that first time home buyer housing product. So you have 33% of the home buying population right now, millennials, that are having kids and they're trying to buy a house. The problem is less than 10% of homes being built are little A affordable. And so that tells you there's your demand. 33% of the home buying population needs a house. 10% of the homes being built they can afford. And so that's what we want to be in. We want to be in that niche where there's very low supply, very high demand. And so we think that for the foreseeable future, these affordable housing products, these homes, these $2,000 per month mortgages are going to just outperform other real estate niches.
Yeah, I love it. I totally agree. I just want to hear your take on it. So thank you. I mean, because I always said with zero experience when I first started in the 90s, I said, look, people won't stop getting married and get buying the first, like that stuff doesn't stop, right? And you're hitting it on a bigger macro level. I love it. Brandon, really cool. I mean, I probably will have a couple more questions here. Tell these guys how to reach you. I don't want to forget that. I get Gavin and forget. Anything you want to share, links, social media, anything you want.
Yeah, there's two types of people that we serve now. One is the investor group. If you're an investor, if you're looking for passive income, if you like the idea of investing in affordable housing communities, land, especially in Nashville, Tennessee, and you want to diversify, you can go to our website, hbgcapital.net. That's pronounced Harry Bob Gary Capital.net. I joked that the .com was stolen, so it is .net. On that website, we've got free resource, 100 questions business owners ask before investing. I wrote that ebook because I got a call from one of our investors to help out his buddy who lost all of his money in a real estate investment. And on that call with him, it became very evident early on that the reason he lost all his money was he was very green. He did not know how to evaluate the sponsor. He did not know how to evaluate the deal. And I put that ebook together as a list of questions. If he had had those questions, he could have been able to avoid that capital loss. Questions unlock the answers we need to make more informed investment decisions. So, if you're an investor, you can go to our website, hbgcapital.net. If you're somebody who's interested in learning how to do these land development projects, turning farmland into entry-level housing communities, we're going to be launching a mastermind here shortly with a course that not only shows how to get these communities approved and sold, but also how to raise money for your deals. So we're going to be teaching how I've raised over $20 million in equity for all the deals that we do so that, you can finance some of these things. So if you're interested in that, you can send an email to info@hbgcapital.net and we can send you some information when it goes live.
Love it. Love it. Appreciate it. That's going to be really cool. We'll talk about that offline for future stuff we can do together. I love that in a lot of ways. Brandon, thanks a bunch, buddy. I love hanging out with you. So we'll have to do some encore work together on the podcasts, maybe in 6 months or so, and see where things are. So appreciate you very much. Anything that I didn't ask that you want a nugget, or just, man, I wish I added that. Anything at all that we can throw in here as a last minute thought?
I know that a lot of people that listen to your stuff are interested in, in getting into real estate, starting their investing journey. And they might be on the sidelines. And if that's you, if that resonates with you, you got to think that every moment you don't make a decision to reach out to somebody like, Chris and get the coaching that you need to start your journey, again, is an opportunity lost for the future that you could be building. And so, I'll kind of give some advice that's probably not very popular. I'm a big burn the bridges type of stuff. You can always go back and get another job if you need as a safety net. Quit the job, go all in, start building that future that you want today. Don't wait. You'll regret it.
I love it. Then I have to ask one more thing, because I thought of it earlier when you talk about mentors. You've been big on mentors. I've been big on mentors literally my whole life from, maybe college on. What do you say to someone directly? You're in front of an audience of 10 people and they all say to you, yeah, I get it. I guess it would work. And, they don't really have the belief in themselves. So they're afraid to either spend the money or go find the money. Because if you knew it worked, you'd find it, right? So what do you say to them?
It's so funny, Chris. We live in a culture where we are totally cool. Let me put it this way. My mom and dad sent me to college, which I think cost, tuition. I think it was like $32,000 plus the cost of living. It probably cost $70,000, $80,000, $90,000 to send me to college, 20 years to go, whatever. That's a lot of money to send somebody to school for a 4-year degree. And they sent me to school and let an 18-year-old pick out whatever it was they wanted to do with their life. You just, you go into all this debt, Brandon, you decide what you want to do, and $80,000 of debt. And that is absolutely ludicrous. That is absolutely ludicrous. I think that we're going to see a transformation, quite frankly. And I think we're already seeing that in the culture, where it won't be send little Johnny off to college and let him get a corporate job pushing pencils. It's going to be send little Johnny and Susie off to whatever business they want to start for the families that are more entrepreneur. And instead of putting that money into college, you can spend $10,000, $20,000, $25,000 and get a phenomenal coaching program in anything. You want to be a gym owner? Like, there's a mastermind for that. You want to go out and learn how to flip houses? There's a coach for that. If you want to go out and start a law firm, there's a mastermind and a coach for that. And the real world experience and one-on-one training you're going to get from that is going to far outweigh the price of what you spend. So, people are okay spending $80,000 in 4 years to get a degree, but they're not okay with spending $10,000 on a coach and a course that takes 8 weeks to go through. And I'll kind of add this too. So a lot of people will buy these coaching programs or these courses and they're like, oh, I did 8 weeks worth of work and it didn't work. But you spend 4 years waking up 8 a.m., going to class at 4 p.m. every day to get a degree, but you're not willing to spend, a year or two to focus on building your real estate portfolio or your real estate career. That is crazy to me. So I think that what I would tell these people is you need to rewire your expectations of what you're getting into and how it's going to help you.
Couldn't agree more. That's why it does take 3 or 4 years. Yeah, I laugh when you say 8 weeks because people do that, or 4 weeks. Oh, it didn't work. Off to the next drilling wells. All right, Brandon, I could keep gabbing. I really appreciate you. Very good, cool nuggets for everybody to run with. So go off and make it an awesome week, my friend. We'll see you again.
Thanks, Chris.
Okay, Wicked Smart listeners, that wraps up our time together today with Mr. Brandon Cobb. Go ahead and reach out to him. We'll put all those contacts and social media and other things we mentioned in the show notes. And I very much look forward to seeing you guys on our next Wicked Smart Sit Down. As a reminder, they run every single Thursday. They have for about 8 or 9 years now. And that's at 4 o'clock Eastern Standard Time on Zoom for about 50 minutes. And we always bring it. Look forward to seeing you there. Say hello. Come on early. Make it an outstanding week.
Hey guys, are you simply sick of juggling a dozen different software tools for your real estate business? I know I was, and I know I'm not a tech person, so it was frustrating. A subscription for this, you got a subscription for that, and they don't even work together out of the box. That's very frustrating, especially in the real estate world where your best time spent is going to be out in the field or on the phone with sellers. And now you're stuck hiring a tech guru just to make all that sync up. So let's ditch the chaos and let REI Black Book handle everything. Automate your lead follow-up, track every deal, analyze things quickly for you, make offers all on one platform. In fact, with the Wicked Smart platform, we now have access, if you're in the Wicked Smart community, to all the other associates' properties. Can you imagine that? So you're brand new in the business perhaps, and your seller looks on your website and sees 20, 30, 40 properties, instant credibility. So you're going to get everything on REI Black Book, from our custom workflows for lead generation all the way to closing. It has it covered. Try it today for just $1, guys. Visit smartrealestatecoach.com/REIBB-DD. smartrealestatecoach.com/REI, B as in boy, B as in boy, hyphen, D as in dog, D as in dog.
Thanks for listening to the Smart Real Estate Coach podcast. If you're ready to invest in yourself and take your investing to the next level, check out our 90-day Jumpstart program by going to smartrealestatecoach.com/jump. That's smartrealestatecoach.com/jump, because now is the time to act boldly in this unprecedented market shift.